Welcome viewers, how are you all? I'm very fine. And today is a very big day. It's because today I'm gonna talk about the macros. Trust me, if you can understand this strategy clearly, you will need nothing else. This is enough. This is more than enough to be profitable. If you are new, this is the first time you are in my channel, then you congratulations. You have already passed your 50% hardest work. The rest 50% stay with me until the end. You will learn everything. You will need nothing, trust me. And if you have been with me for a while, then you know guys how do I actually explain everything. So you will be stuck over here, trust me. You will love this concept. And if you even if you don't need to practice this one, because this whole week I will go with you only depending on this strategy. So I'll go step by step. Firstly, I would like to talk about the rules, about this video rules. How do you watch this video? First of all, you have to follow every instruction. I mean every instruction. If I say you to pause, you have to pause. If I say note it down, you have to note it down. If you just watch it for the first time and then come back and rewatch this video, follow my instruction, trust me, it won't help you. You have to do it for the first time. So this is the one rules for for this video. I mean one shot, one kill. That's all. And today I'm gonna talk about four macro which I really love. uh, I will talk about this macros later. Before going further, I want to give you a plan only for this week. This is for only this week, and you can't ask me any question regarding this video, trust me. If you ask me any question to the comment box, I won't reply you. If you understand what I mean to deliver by this video, only then comment, yeah, I got it. You can just comment this, I got it. Nothing more, nothing less. Now, let's talk about the plan. This week, we will go only these four macros, and we will find setup between this macro time. We will count as well how many setups we get by using this macro time only. In the meantime, if you have any doubt, I mean, is there any doubt arise in your mind, you will write it down in your notebook. And when this week will, I will go every day, go through these macros, you will try to find out your answer. You can ask me why. The reason is, if I give you the answer easily, you will forget it. Definitely you will forget it. But if you can find the answer of your own questions, you will never forget it. I want you to learn this strategy, guys. Trust me, so that you can understand. You need nothing else except this setup, this on setup only. But by the end of this week, if your doubts aren't clear, you will ask me the question after Friday, New York local time 4 p.m. That means Friday 4 p.m. New York local time. You can ask me the question to the comment box, and I will try to reply your question. I will try to clear your doubts. But I promise you guys, you will be self-dependent if you can understand this concept clearly. There will be any no doubts, and this only one setup is more than enough to be profitable. Okay, here is the precautions, and you have to remember this. The first one is, nothing is certain in this game. You will take losing trade. This is only for educational purpose. I strictly telling you not to risk real money. Last but not least, trust the process, because everything in this world lasts on trust. So that is the precaution. I think you will understand this. What I mean by what I mean to say over here. Let's go to the macros. Here is four macros: 950 to 1010, 1050 to 1110, 150 to 210 p.m., 250 to 310 p.m. So all of this is New York local time. I will try to take the entry between this time frame, and you will understand later when I will go deeper to this video. Here is the rules. But before going to the rules, please pause the video. This is your instruction. Follow it. Pause the I'm sorry. Just pause your video, bring your notebook and write it down. It it's gonna use every day this week. So please write it down. Before writing it down, don't go further. Well, there is the rules. If you bring your notebook, then write it down. First of all, you will go to the Forex factory or any other calendar you like to check there is any high or medium impact news around these macros. I mean, in this macro time, you have to check is there any high impact news. You will see it. I mean, you will use the USD actually. So, is there any high impact news for USD? You will see like the red color, something like that, and also the medium impact news. If you see there is any high impact or medium impact news, then you will skip that macro. You can't find the trade setup over there. And if you see there is nothing like that, then you are good to go. You will open 15-minute chart, 5-minute chart, and the 1-minute chart. You can open it in one monitor. If you are using the TradingView paid version, then you can do it, or you can do it by tab. That means whatever browser you are using, you will open three tab. One tab, the first tab will be 15-minute chart, second tab will be 5-minute chart, and the last tab will be 1-minute chart. Start from 15-minute chart to mark the last swing high above the current price and last swing low below the current market price. You will understand. I will show you what I mean by that. If nothing is significant, then go to the 5-minute chart and lastly in 1-minute chart. I prefer 15-minute for overall bias. Now let's go over there. What I mean by that. I just marked it down something. Right now you are here. Your price is here. So you will see the last high, swing high. And as well as you will see the last swing low. If your price is over there, you will look for the last swing low. Now look at the last swing high, what it did. Has it cleared the buy side from before or it has just made the equal or relative equal highs? Okay, what I mean by that. If you see this swing high, the last swing high, it has actually cleared the sell side liquidity. And if you see over here, it has actually made the relative equal high. Same for the sell side. If you look at here, you will see the last swing low, it has cleared the sell side. Or sometimes you will see that the sell side at the last swing low, it has actually made the equal low. So this is the sell side liquidity. I think it's clear. So do same for the swing low. 5-minute and 1-minute is good for scalping, which I'm gonna teach you. This is for 15-minute. If you don't see anything like this in 15-minute, then you will go to 5-minute for looking for your bias. That means overall where market can go. This is not for macro, okay? This is for overall where market can go after you opened your chart. This is for the bias. But for scalping, for taking entry, I will go to the chart and I will show you that entry technique, everything I'll show you over there. There is one more precaution. If you see something strange, different, or you cannot able to mark last swing high or swing low, anything outside of these rules, I mean these rules, you will skip that day. Remember, every day is not for trading. So I think it's clear. If it's not clear, watch it again. And now the setup. Price will take the liquidity and give you a very nice market structure shift. This is the first rules. And it has to be happen where price can build the liquidity when it will inside the macro and then clear the liquidity, or it can clear the liquidity from outside of the macro. I mean, if you see this everything, think this is 1-minute chart and it happened inside the macro. This is 10. Let me mark it so that it will be more clear. Okay. First you think this is your starting your macro and hold on here. This is your end of the macro. This is 10:50, this is 11:10. Okay. So this total thing can happen inside the macro. It can clear the build the liquidity inside the macro, then clear it, or think like that. This is your starting macro and this is the ending of the macro. So price actually build the liquidity before the macro, and then inside the macro it has actually cleared it. That's the thing I was there talking to. You have to remember, market will clear some sort of liquidity. This is the first rule for the macro. So that is the macro. And but market structure shift has to be inside the macro. You can take entry immediate after the macro. What I mean by that, this you see, like, I want to look it here. Think like that. This is the buy side liquidity. Price actually cleared the buy side liquidity, and this is swing low. Market structure has shifted over here. There is your fair value gap. So you can take the entry here even if it happens after the macro. You can take the entry, but this market structure shift has to be happen inside the macro. Everything else can happen before the macro or after the macro, but market structure shift, I need it inside the macro. If it's not clear, watch it again. I'm just telling this because my English is not that much good. So if you don't understand or it's not clear, then watch it again. So that is the setup rules, and I think it's very simple. Only two rules: price will take the liquidity and give you a nice market structure shift. You will take your entry inside the fair value gap. Price can build the liquidity when it will inside the macro and then clear the liquidity, or it can clear the liquidity from outside of macro zone. But market structure shift has to be inside the macro. You can take entry immediate after the macro or inside the macro. You will go for 5 handle. If you are using mini S&P, then you will go for 5 handle. I don't care how far price will go, but I will stop when it will go to the 5 handle. And 20 handle for Nasdaq. So you can go for 20 handle for Nasdaq. Not more than 20 handle, not less than 20 handle. So this is the rule where you have to be strict. Sometimes it happens, price went your way, go a certain level, then come back again and hit your stop loss. And you, wherever you could take a profit, you have already observed, actually take a loss. So you have to be strict to this rule. 5 handle for mini S&P and 20 handle for Nasdaq. So that's all about everything. Now let's go to the chart. Here I am in the chart. It's mini Nasdaq, and I'm in the 1 minute chart. This is from the yesterday's price action. For your understanding, I have to make the video, so I'm using yesterday's price action. Here is the blue line. It's divided into the macro. That means 950 to 1010 macro. This is the macro. If you think I'm just showing you the insight, you just go to my Twitter, and I outlined everything over there before price actually did. I took 3 entry in the morning and 1 entry at the evening. I I actually called the price before it happens. And if you, any of you here who was actually to the Twitter yesterday, please comment it to the comment box so that the new people, they can understand. Actually, I'm not showing you the hindsight. It will be helpful for me as well. So let's go to the 15-minute as per rules. So here is the 15-minute chart. As I told you, price is over here. So I will look for the last swing high, and you can see this is the last swing high before the current price. This is the last swing high. So I'll mark it actually as the swing high, and this is the last swing low. This is for understanding the bias where price can go. Okay, now what I did tell you, I tell you, you have to look for what the the swing high did before. It has actually cleared this high, all of this buy side, it has cleared by this. and also this swing low has cleared this sell side. Just let me mark it. I mean this. So this is more significant. It has cleared this sell side liquidity, and this one little bit confusing, so I just leave it. I'm going to 5 minute to make more understand. Now I can see this price actually cleared all of this buy side liquidity. It has cleared this sell side liquidity. Price traded over this gap. Nothing important over here. I went from 15 minute to 5 minute. It's because to understand the bias. And recently it has cleared the sell side liquidity. You can see this is very clear. It has cleared the sell side liquidity and now traded over here. I am expecting market will go to this high. I'm expecting. Okay. Now let's go to the 1 minute. In 1 minute chart, I don't need this one anymore because you know what it has done over there. I'll need this one because this one is clear. I don't need to actually remove it right now. I will see what price did to the 1 minute chart. I told you guys I will go for the scalp, and this is the thing. You see, this is my whole price over here, and as you can say it just recently. This is for 1 minute, okay, guys. In 1 minute, it has cleared all of this buy side liquidity. All of this buy side liquidity. Price just cleared it before going inside the macro. It has cleared the buy side liquidity, and if you see, this is a very nice equal low. Is it clear, guys, or not? Okay, I'm coming from 15-minute chart. In 15-minute chart, I marked the last swing high and last swing low, and I saw that it has actually cleared the sell side liquidity. So I'm expecting higher price. This is my bias. Okay, and in 1 minute, I have seen that it has actually recently cleared all of this buy side liquidity. If it didn't clear it, think like it was over here. It didn't clear the buy side liquidity and now traded over here. I I would like to wait for the buy side. You know, price will go buy side. That would be in my mind. But in 1 minute, I can see it's clearly cleared the buy side liquidity, and now price is over here. So I will see what will happen inside the macro. So let's go together. So price is inside the macro. It's 950, and again, do you see? It has, when it came inside the macro, it has cleared buy side liquidity again. Just show it. Let me show it here. That means it has cleared the buy side liquidity. This happens before the macro. I don't care about that. When inside price is inside the macro and then clear the buy side again, it is important for me. Now I will look for a very nice or clean market structure shift. I will look for that. Let's see price what did it does. Okay, price went above. More beautifully, it has cleared the buy side liquidity. You see, when price came into the macro, it didn't clear any sell side liquidity. If I have seen that, it has actually cleared some sort of liquidity. That means the sell side. For example, if I see that this candle actually came here and cleared this sell side liquidity, then gave me this nice market structure shift, I would look for a buy from here. Let's see what price did. It come back again. You see, it has traded to this fair value gap, but I'm not looking for buy. Why? It's because it didn't clear the sell side and then didn't give me the market structure shift. That means the job is not done over here. I won't go for the buy. Let's see. And here. Now, if you look clear, it has actually cleared all of this buy side liquidity inside the macro. it has built this high, or you can say this relative equal high, or the previous buy side liquidity, all is cleared by this swing high, and then give me a very nice market structure shift. This is my market structure shift. If you would like to mark this low as a market structure shift, I'll be agree with you. This is the market structure shift. Why? For knowing that, you have to go to my playlist, and from there you will find a video which is how to avoid the losses, so avoiding the losing trade. So in that video I have described everything about which swing high or swing low you have to mark for the market structure shift. So that is my market structure shift, and I will look for a fair value gap over here. If you see closely, there is a fair value gap. I know this is not a very nice or clean fair value gap. If you would like to skip this one, you can skip, because there are four times you will get this macro, and you will use this rules actually. So if you would like to skip this one, you can skip, but I will go for short from here. It's because it has cleared the buy side liquidity, and if I see the previous mm, previous price action, it has cleared all of this buy side liquidity. My expectation is it will go lower, and I will mark the 20 handle, that will be here. Okay, like, so what is the price? It's 14844, 14844. So I will go short from there, 14844. So here is my liquidity, and 14834. Okay, that is my target. And now you can say I have a very low risk reward ratio. It's almost 1:1. I don't care, guys. It's because sometimes you will find some setup where your stop loss will be like this and your target will be here. Sometimes you will see like that. I don't care about this. It's because if you are almost right 8 or 9 times out of 10, why do you think about the risk reward ratio? You are already profitable, guys. So I am not a big fan of risk reward ratio, but it is what it is. So let's see what price did. There is my entry. You see this candle, just this candle, I'm already inside the market, and boom. You see, I'm already profitable within 2 to 3 minutes. Now, if you would like to go lower, something like this, I'm just showing you because you need to learn this, okay? Maybe this time you are profitable, but sometimes you will see that market went above, hit your stop loss, and your winning trade turns into your losing trade. So that's why I told you to strict over here. You will go for only 20 handle. I'm just gonna teach you the macros. So here is 950 to 1010. So let's go to the what can say 1110. This is your 1110 and 1050. Okay, so let's go over there. So in this candle, market is already inside the the macro. I'm not going to the 15-minute chart again. It's because I already know 15-minute level is here, and the lower level is somewhere here, whatever, I don't care. But my overall bias is bullish until it won't above the high. So overall my bias is bullish, but I will look for the 1-minute chart, and what I find over here, let's talk about that. Right now price is over. Okay, let me go before one candle. Okay, so it's just before 1050 to 1110 macro. What actually price did over here, you can see price came here, it went higher. From here you can say it has cleared the buy side liquidity, gave you a market structure shift, price traded the fair value gap, came lower, cleared the sell side liquidity, traded over here, and now over here. So nothing is clear what which way you will go. you can see this sell side liquidity is still very juicy, and you know your higher time frame, that means the 15-minute time frame, recommend you to go for buy. So I will look what price do over here. I have no bias, I have nothing information for this macro. And for your kind information, if you have facing this type of problem where you are not clear what actually price would like to do, here you are clear that market actually cleared the buy side liquidity, so it will go for the sell side. But if you see the price over here, it's not clear, price go above. Here it has cleared the buy side liquidity, here it has cleared the sell side liquidity. Now it's in the middle of the range. So let's see what price did actually. So it came lower. Now I need some liquidity taken first. Okay, here if you look here, it has actually cleared the liquidity from there. So the liquidity taken has to be happen when price is inside this macro, but the liquidity can build before the macro or inside the macro. Is it clear, guys? But the market structure shift has to be happen inside the macro. So liquidity taken also has to be inside the macro. Market structure shift also has to be inside the macro. But the liquidity build, it can build before the macro or inside the macro, I don't care. And if you'd like to take your entry, you can take it inside the macro or immediate after one or two candle after the macro actually. So here I can say, I can see this is the sell side liquidity taken. Now you can ask, bro, it has taken this sell side. Yeah, I'm with you. Agree with you. It has taken this sell side buy side liquidity, then gave you market structure shift. You can say that, but no, it's not valid for me. Why? Because when price is inside the macro, the first thing it will do is it will clear the buy side or I mean the any type of liquidity. When I have seen this candle or this candle, when it's inside the macro, it has cleared this sell side liquidity. All of the lows over here, it has cleared it. So this one is not for valid for me. It has cleared the sell side liquidity. I will look for a nice market structure shift now. If I see any market structure shift above, let me clear this. Above, I'll go for buy. If I see it has actually shifted lower, then I want to, take that trade. Though I know the sell side is over here, price is going toward the sell side, but the macro rules is price has to take some liquidity. Now, what else it can happen? Now price can go like this way. It will go and take some liquidity from here, then give you a very nice market structure shift over here. You will see a very nice fair value gap. You can take the short. It can happen. So let's see what price did actually. So price was hanging around, nothing is important, and you see is still nothing, and here. So it has cleared this sell side liquidity, then gave you a very nice market structure shift. This is your market structure shift. Now you will look for an entry over here. So the very next candle, let me actually move it a little bit. The very next candle, it has make a very nice fair value gap. Okay, market. What I told you about two fair value gap situated one above the other. The second one is the breakaway gap, and your stop loss has to be below the 50% of the the consequent encroachment. So and you have to take your entry when price will just tap to the fair value gap, the upper fair value gap. So let's see, and price go away. It didn't give you any chance to take entry over here, and it's actually true for from the macro as well. If you see it, there is your macro time, so it's already true for from your macro. But if price could tap here, then you would take this entry, and it was also 20 handle. If you mark the 20 handle, it was more than 20 handle actually. It's nearly 37 handle, something like that. But why I am telling you this? Now look at this, guys. If you mark in the macro time, if you mark, this is actually the buy side liquidity sorry, buy side liquidity taken, and this one is your market structure shift, then you would wait to price come to this, this fair value gap, and you will take your sell here. Your stop loss maybe would be here, but you are still in loss. That means you have already avoided a losing trend. Though you didn't get any chance, price didn't give you any chance to take your entry over here, but you have avoided a loss. How? Just knowing this, what macro do? So let's go to the PM session macro. I know guys, it's gonna be a very long video, but if you really want to know this concept, you have to watch it. And I recommend you to go with you know s- lower speed. In YouTube settings you will find the speed option. Go there and mark your speed like nearly zero point 0.5 or 0.75, something like that. I think it will be more easier to understand for you guys. Okay. Later you see, later it gave you the chance at actually the 1250 macro. It gave you the chance to take your entry. This is another macro, but I do not want to talk about this today. This macro actually act different way. The other macros, but these four macros which I am talking about over here, it actually work same way. So you see, just let me mark it. So this is your 1250 and this is your 110. Inside this macro, it happens. It tap to this fair value gap and boom. Okay, whatever. So now let's come to the next macro, and that is 150 to 210 PM macro. Okay. Now I will look for, I won't go to the buy side 15-minute chart. Still this high isn't breeze. Okay. This is still working. The last macro, if you see it breezed, then you will go to 15-minute chart. You will find your current price section and you will mark your last swing high. But until this swing high is not broken, or this swing low, this low is not broken, you have to keep this two level in your chart for that day. It's because price is actually range bound inside this two level. So I'm not going any other time frame. Okay, 159 candle. Now what do you see? What has price done here? You see this low and this low, they are relatively equal low. These are the relatively equal low. Let me clear this one. My high time frame bias is telling me to go to this level. Okay, my higher time frame, that means 15-minute, it is telling me that price will go over there. But now my lower time frame is telling me that this is equal low, brother. When it will be inside the macro, it will clean the equal low first, then it will give you a higher market structure shift, then you can go over there. But if you see price went above and gave you a very nice market structure shift for the lower side, and it's inside the macro, you please go over there because this is clean. I need to see what is it, taking the buy side liquidity first or the sell side liquidity first. I don't know where price will go. So I'm waiting for further information. Okay, price is over there and see it has cleaned this high. Is it a very clean swing high? Now I have marked this as a buy side liquidity has taken over there. Now I will wait for a very nice market structure shift. Okay, price didn't give me nice or any type of market structure shift. It went above. That means it has made this high and now it has cleared the buy side liquidity from there again. Now you can say, brother, it has actually shifted the market structure here. No, brother, when it came inside this macro, did it clear any sell side liquidity? It has cleared the sell side liquidity from here, but when it happened outside of the macro, it's not valid for me. If you are confused over here, please skip this macro. You will get another macro. That means one day I'm giving you 4 chance to take entry, but you can't breach your rule, or you can force the market to to go the price as you wish. It won't happen. So you have to stick with your rules. Here I'm seeing that market actually price came inside this macro, it has first cleaned this buy side liquidity, then it has cleared the buy side liquidity again. Now this low is suspicious for me. Now let's see what price did. It went again above the market, and that means the swing high. And now you see this low breached by this low. I was waiting for my market structure shift. Is this valid market structure shift? Go and watch that video, how to avoid losing trade. And if you see, actually here as well, market didn't give you any chance to take the entry. If you see the market, I mean the fair value gap, it was my fair value gap. I was expecting that price would, if price can close this, I mean it can trade to this gap, I will take short. And if I mark the short, actually think like from here, your stop loss will be above here, and for 20 handle, 20 20, okay, that would be your trade. But price didn't give you any chance, though I know what price did over here. It actually traded the, I mean the bearish breaker, high low higher high. If you mark your last down close candle, this is your breaker, I mean this is your breaker. Sometimes you will see that price, when I take entry but price didn't trade the fair value gap, but I am in the market, I took that entry depending on the breaker. I love breaker. This is another topics. I have already made a video maybe, yeah, about breaker. You can check that out as well. If you take your entry to the breaker, still you are profitable time. So here is your 249 candle just before the macro. Okay, here I would like to see what price did. So far we can see prices over here, and there is the relatively equal high, and there is the relatively equal low. When price will go inside this macro, we will look for taking liquidity first. Let's see what price did. It's inside the macro, I mean 250. So here in that candle, it has, what it has done, it has taken the last low, swing low. It's already taken over here. Now I will look for shifting the market structure. If I see market structure shift above, then this high will be my target. Okay, do you get the point, guys? When it will be inside the macro, it will take the liquidity first. You have 50-50 chance price to go over here or going over there to clear the buy side liquidity. We don't know where it will go, but the first sign it has showed me that market cleared the sell side liquidity, so most probably price will go and clear the buy side. Let's go here. Do you see any buy side liquidity has taken over here? Do you see anything? I don't see anything. I have seen that market actually cleared the sell side liquidity first, then you can say it has built the sell side liquidity again and cleared the sell side liquidity again. This is not my market structure shift when it's inside the macro. Okay, so let's go further, and boom, it has came here. Now you can say, oh bro, you have already missed the entry. I didn't miss the entry, I missed, you know, a losing entry, because it didn't fit any rules. My rules is, first it will go, if it would like to go lower, then it will go up and clear the buy side liquidity, then it will give me a very nice market structure shift. What it did, it didn't clear the buy side liquidity and then went lower. What I am thinking is, it has actually came this low to clear this sell side liquidity. Now you can think, okay, now price will go lower, you will never get a chance. Still I am looking for a buy side liquidity, I mean the buy side market structure shift. This whole price action is actually the run for taking the sell side liquidity. Let's see, it went lower, 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 and there. I didn't get any market structure shift inside the macro. If you see, after the macro, I have seen this market structure shift, and I took this entry. Though I'm telling you I will take only the macro entry, you have to understand the thinking process, how it works over here. Sometimes you will see market doesn't work properly. In that case, you will avoid it. What will happen? Maybe you will lose a entry, but most of the time you will see you can avoid the losing trade. So I always prefer to take the chance of losing entry. I'm kidding. I'm just I would like to say that I always prefer to take entry if I see it meets all the rule, and that helps me to get more profitable entry. Today you have seen that yesterday, I mean yesterday it has actually taken you could take one entry, but someday you will see you will get nearly four entry, and it all works. So every day is not same. In my Twitter account I outlined this entry actually, so it has traded over here. If you see, I took that entry, this last hour entry, so I took there, and my target was above there somewhere. I don't remember. I think, yeah, here, this by said liquidity was my target. I mean the trade was closed over there, so entry was here somewhere to the water block. So that's all, guys. This is the whole processing of macro. I hope it will help you to avoid some losses and to clearly understand the price action. And if you see little bit wider, it has actually cleared this sell side liquidity, then gave you the market structure shift. If you see this type of price action after the macro, yeah, sometimes you can take risk, and the rules is you have to take entry at the top of this fair value gap, and your stop loss has to happen before the I mean below the concept. Most of the time, I mean 99% time, you will see it didn't trade below the consequent encroachment of the second fair value gap, but sometimes it can trade to the lower fair value gap. You will take a loss, it doesn't matter. So I think, guys, everything is clear now. I hope you will understand this concept, and this week we will see how it works. So enjoy the video and your trading journey. See you guys. Bye bye.